Pulamnaka, and welcome to tonight's Talk Business. With us is the CEO of Fiji's Provident Fund, Mr. Chawich Koroi, and Mr. Alipate Wangairawai. Mr. Koroi, let's start off Talk Business tonight with what was the purpose of setting up FNPF as the country's loan retirement savings scheme?
Thank you very much, Drew. Thank you for this opportunity to connect to our viewers through this Talk Business platform with Fiji TV. To your question on the setup of the fund, as you would recall, FNPF was set up in 1966. Even before our independence, our forefathers have set up the fund with a clear mandate to allow members, to allow workers to contribute some portions of their savings for their retirement. As you know, Andrew, we will retire at some point in time. So the purpose of the fund is really that we set aside some of our income now to protect us during that retirement.
Mr. Wangairawai, the fund's worth today compared to its value when it was set up?
The fund was set up in 1966 with a £10,000 initial capital. And as at the end of 30th of June last year, 30th of June 2019, the fund is a 7.4 billion organization. The total assets that the fund has is 7.4 billion. From those small and humble beginnings, we are now the largest financial organization in terms of the asset base, which is 7.4 billion.
This one then, Mr. Wangairawai, in terms of members' fund, how does the fund then manage members' savings?
The basic purpose of the fund is to collect those contributions that we receive, collect those contributions, and then we invest it. Invested in the hope of growing those funds to a sufficient balances that during the working time of the worker, that it would have accumulated to a large enough balance. So that's the basic purpose of FNPF. It's a savings fund designed to save your monies whilst you are working. And by the time you reach your retirement age, which is the eligibility age is 55 onwards, you would have sufficient balances to have enough balances to the second purpose for you to meet the second purpose, which is to provide you a post-retirement income, a monthly pension. So the fund's purpose and mandate has been there all along, and it is not deviated from that.
Mr. Koroi, when looking at the collection of contribution apart from FNPF, ensuring that employers pay the FNPF dues, what is the role of members in this process apart from just expecting that FNPF contribution to be paid to their accounts?
Drew, thank you. I think it's important to specify that we administer FNPF through the FNPF Act. Whatever we do comes from the legislation which we set up to guide us in what we do. Even contributions is set up by how much we can contribute from our members and even the employers. Basically, there are 4 key success factors for any institutions like us. First is the design of the scheme. How is the scheme designed to ensure that it works? We, as part of our reform in 2012, we changed the design of the scheme. Prior to this, there was only one fund. We have now set up separate funds to cater for pension, cater for the accumulation, because while we are working, we are in the accumulation phase. At retirement, there's a different phase, which is a pension fund. So we separate those types of scheme. The separation of the members' balances to 70 and 30, that was also a scheme design change as part of the reforms. The second key success factor is public acceptability. How do we relate to our members, the social contract with our members? And this is an area that as part of these awarenesses, we're trying to reach directly to our members to make sure that members really understand how their funds are administered by FNPF. Thirdly is the solidarity or working with government. Government is the legislator, and in this case, they, particularly in this COVID assistance, you see they are coming in and topping up those members that have exhausted their general account. And finally, the sustainability of the fund. Not only financial sustainability, but administrative sustainability. How do we administer the operation, particularly during COVID? That was a big demand on us in terms of operation. Normally, what we are doing now is 4 or 5 times what we do in a year. So how do we administer these funds during these times of crisis? So these are the 4 key factors that makes an institution like FNPF successful.
Mr. Wangarawai, in terms of investment, what is FNPF's investment strategy and how do you ensure it derives a return that would benefit members?
Look, the investment of the fund is guided by the investment portfolio statement. That ensures that the funds, it dictates to where the funds can grow, where it can invest, or what assets does it invest in. There are strict guidelines that our executive follow in terms of trying to ensure that the risks are mitigated in terms of the investments that we do. As you know, we invest in the tourism industry, the telecommunications industry, the properties that we have. We've got commercial loans that we give out. Government bonds is another part of it. So it's a well diversified excuse me, strategy that ensures that that it's in terms of the risk, it manages the risk that will arise out of it. So in terms of the enterprise risk platform of the fund, it's aligned closely with the investment portfolio statement, which ties in with the distribution policy that we have at the end of the day. So these are very well mitigated strategies that the fund has in terms of when it comes to investing our hard-earned members' funds. Because whilst the fund is in our care from between 6 or 18 when you join to 55, we as trustees administer that fund. And hopefully we would grow, and inbuilt in that to ensure that it's safe and protected are these guidelines that is in our investment portfolio statement for us to follow to ensure that your money is not unduly placed at risk.
Do stay with us. We'll come back after this break more on managing members of FNPF saving. Welcome back. We're still with the FNPF CEO, Mr. Chauchi Koroi and Mr. Alipate Wangarawai. Mr. Koroi, there's a lot of talk about FNPF. How do you invest members' fund and how does it work for them?
Thank you, Andrew. This is a very important topic, and it's, let me give some context and background to this. Prior to the reform in 2011, the funds were invested under the Act in accordance with the Trustee Act. So there was a line in the FNPF Act that all funds must be in fact invested in accordance to the Trustee Act. The Trustee Act was quite restrictive in what we can invest in. Basically, it's government bonds and listed companies who have paid out dividends over a certain period. It was part of an old legislation or under the Commonwealth government. So as part of the changes, what happened at that time, that majority of our investments were in government bonds. However, as part of the change, because the economy is now more diversified, it gives the opportunity for the fund to invest in other sectors of the economy, which is not much different from what happened abroad. So we changed our approach from a very passive investment to a more active and diversified portfolio. Prior to the reform, our investment in government bonds used to sit at around 76%. We have brought that down to 43% at the moment of our total investment portfolio. But this is guided by the investment policy statement, which my colleague has explained earlier. So whatever we do, change the legislation, that needs to be reflected in the policy statement, and how we governance, the governance that's set from a different policy, investment position to a more active position. There's been a lot of talk, of course, as part of our tourism sector. You know, the economy of Fiji, there's about 42% or 40% of the economy is in the tourism sector. Our portfolio is around 12%. Investment in hotels and tourism-related investments. So what that means is when there is COVID, of course COVID has affected everybody, but it affects the economy by 42%. but it affects our portfolio by only 10%. That means we are more diversified than the economy. Tourism is a sector that we invest in. It's a long-term sector, it's a growth sector, and it's important for the fund to invest in it, but we need to manage the risk and return out of it.
Mr. Ongarawai, COVID-19, there's a lot of talk. It has crippled the world and locally. How is FNPF managing its downturn, especially when members would be worried about the impact on the retirement savings?
No, like the FNPF stands by its members in the good times and in the bad times. And in fact, it's legislated in our Act. In our Act, it provides for the FNPF to assist our members during times such as this. The natural disasters, the Winston and the Herald, and likewise the pandemic, the COVID-19 that's happening now. And then we stand by our members to ensure that we go through these difficulties together with them. Now, for us at FNPF, the way we look and we give out this assistance, we are not looking at just the withdrawals, but to us, every withdrawal that we make, is there a member? Behind that withdrawal is a member and his family or her family. Needs to put buy medical expenses for their children, send their children to school for fees, or to pay for their house, which it's housing our members and their family. So for us, we ask our staff to ensure that when they come in, for this COVID-19, you treat everyone and put yourself in the members' shoes and understand the difficulties that they are going through. So there's already been 4 phases that's been announced: phase 1, phase 2, phase 3, phase 4, currently going on now. And we are thankful to the government. And as the CEO had alluded to, the government, we are assisting with government for the top-ups that has been provided in terms of us, for those that have exhausted their general account for certain phases 1, 2, and 3. Government is topping up those. And we have collaborated with the government to ensure that this assistance is rolled out to our members who are facing difficulties. Times are difficult on the ground, and we stand by our members to ensure that we go through with them in the good times, but also we stand by with them during the difficult times such as the pandemic 19, the COVID-19 that we are going through.
Let me just touch on that one. I think our investment in tourism sector is a key matter that we need to explain to our members. FNPF is a long-term investor. What do we mean by that? It means that members who are joining today don't have to retire today. They have another 35 years of their working life before they reach their retirement. That gives us a good horizon in terms of how we invest. These assets, these good properties that we have in our hotels, we don't have to sell it today because the liabilities for our members don't come today. It's for the future. So it's our ability to ride out this cycle to make sure that members in the future benefit from these investments. Of course, it doesn't mean that we also have to actively go and manage these assets with our hotel managers. We talk to them on how they reduce their costs. We talk to them on how they can continue to cushion the impact during these 1 or 2 years when tourism earnings are not there. But also these assets or this hotel sits with a lot of real estate that we can sell and generate earnings to our members into the future. So it's important that the members understand that we are managing this impact, but we don't have to, because these are good solid assets that we have to benefit for the members in the long run.
Stay with us. After this break, we'll talk more about the FNPF plans for our retirement. Buluvinak, and welcome back to our final segment of Talk Business tonight. There's a lot been said about investment in government securities, with close to half of FNPF's total asset invested in government security. CEO, why have FNPF invested so much?
In one of our earlier segments, I explained the hindsights to it. But government bonds is always a key asset in any funds like us. I think if you look around the region, even in Papua New Guinea, Singapore, for instance. Singapore, all their funds are invested in government bonds. But it's an investment decision. And government bonds is always considered the lowest risk in any types of investment. I need to relate to the members that in the last year, FNPF received 300 million in the interest on our investment in government bonds. So it is the highest and it's the most stable of all the earnings that we get from our investment portfolio. And I think there's also a misconception that the process that we follow is a very transparent process. Of course, Reserve Bank of Fiji, as the registrar of government debt, when there's a need to raise government bonds, they publish this in the papers. They publicize the opportunity for investors, and investors like us, other insurance institutions, commercial banks, then put in their tenders on the pricing and how much they want to take. So it's a transparent process, and the Reserve Bank, as the lender of last resort to government, and also the Register of Debt, they went through the process and they allocate who to take the bonds, depending on your bid. In most cases, our bids are also unsuccessful. So it's not like that we are always winner. There's cases where we have lost out totally because other investors have underbid us. So the key message is government bond is a stable asset portfolio of any investment company like us. It's the lowest risk. And in the last year, we received over 300 million in interest from these investments.
Mr. Ngrawai, in one of your press conferences, you mentioned investment in telecommunication, another area that you are doing well. Can you tell us more about this?
I'll probably start with it, and the CEO can elaborate later on. As you know, that we have a very large shareholding. I think it's about 73% in ATH, which is the parent company of Vodafone company. So we are the majority shareholders in Vodafone company. And via that shareholding also, we also have our footprint in the Pacific, which is we own the telecommunication company in the Blue Sky in Cook Islands, in Western Samoa, in Kiribati, in Vanuatu, and now we are thinking of going into Papua New Guinea. So these are the investments where, so for those of you that have Vodafone subscribers to Vodafone, you are also contributing to your own interest at the end of the day. And also during this COVID, data has really shot up in terms of when the CEO was alluding to the diversified investment. So down in the tourism, but that's the benefit of having a well-diversified portfolio. Telecommunications, the use of data is picking up, and so we are getting good. So it's offsetting the reduction in the tourism industry.
Yeah. Telecommunication is one of the sectors that's immune to this COVID. Immune in the sense that it's not like totally gone. In fact, the demand for data is increased more during this crisis as people, during the lockdown, social distancing, a lot more companies are using the digital platforms to engage with our members. So the need for data has more or less increased. So what does that mean for our investments? As Pate has mentioned, we have a significant exposure, 73% in ATH, and directly about another 49% in Vodafone. Through ATH also they own the 51%. This investment in Vodafone is doing quite well, doing very well, and the Pate has mentioned that we are expanding our footprints in the Pacific, particularly in Papua New Guinea, which is a major market. They have started the rollout in Papua New Guinea, so it's a big sector that will generate future returns for our members. But particularly Papua New Guinea entry, this is a major step for ATH and Vodafone because it's a big market and a lot of opportunities in this segment. So we invest those funds for the long-term return for our members. For instance, when we bought Vodafone in 2014 or 2015, we have the amount that we bought Vodafone in, we have already received about 80% of that in dividends over these years. That's just the dividend that we receive on an annual basis. The value of that investment is much more than what it was. So this is the investment, types of investment that's good for our members. Yeah? And for all those Vodafone users, remember that when you use our Vodafone platform, you are indirectly contributing to your investment.
COVID-19, how is the pandemic payment coming along for FNPF as we speak?
As we always mention, whatever we do is within the law. This COVID assistance under the unemployment withdrawals for our members is clearly defined in the Act, that the board can exercise this process during these times. I think to date, we have announced that this phase 3 and phase 2, it's going to continue. And this will take about 55,000 members up towards the end of this year with that assistance. Yeah? Total cost is about 50 million, and we're thankful that the government is coming in to assist those that have exhausted their general account.
And when we look at, just to give you a snapshot of how much the fund has paid out in terms of COVID, during round 1 and round 2, 87 million when we started this project, particularly for those that have the lockdown areas of the tourism industries and all of that. So far we paid 87, and out of government top-up was 22 million out of that 87 million, and FNPF's portion is 65 million. In round 2, we had that assisted 113,000 members. Round 2, 26,300 members. We paid a total of about 22.7 million. So, in terms of the assistance that we've given out, it's quite a lot of money that that we've given out. But hopefully, we've given it in such a way, which is why we paid it out in installments. We know the difficulties that members, so we try and put it in installments so that it helps them rather than just giving that to them in lump. And as Chawich had alluded to, we are working closely with government in rolling out this COVID-19 assistance. Although there may be some difficulties that we had initially when they started teething problems, as a project of this magnitude, we'll always have some teething problems. And now we take this opportunity to those members who may have had experiences that they didn't expect. We will take this time to apologize to all of you. And we always encourage our members, if they're having difficulties, please come and see us, tell us what your problem is, and we will try and resolve it as quickly as possible.
One of the biggest discipline that we have is to make sure before we roll out anything, we need to know the cost, and we need to have the assets to meet or the cash to meet that portion. So far, we have paid out a total of about 145 million from phase 1 till now. Out of that, 97 million has come from FNPF, and about 48 million is the value of top-up from government. So we need to know, and we have the assets to meet that liability moving forward.
Anything else I would like to add, gentlemen, before we finish the show for tonight, Mr. Ko?
Let me just take this opportunity to thank all the parties that we have collaborated to date to make sure that this withdrawal or COVID assistance are rolled out quickly. We state our appreciation again to government, the Association of Banks, and all other stakeholders, employers who have worked together, not forgetting our staff and their families. We have toiled hard during this period. FNPF has become classified as essential services. That means we have to step beyond what's required of us to make sure that we deliver these services to our members efficiently. Thank you.
Again, we would like to thank the Fiji National Provident Fund CEO and Mr. Alipate Wangarawi. That's our talk business for tonight. We look forward to having you gentlemen again in the next few months of talk business. Until then, have a good evening.